Good morning, everybody. It's current market analysis. It's Thursday, June the 1st, 2023. A continuing series of looking at market analysis, looking for possible trade setups every Tuesday, every Thursday. And just a reminder that this is for education purposes only and not intended as investment advice. Before we get started, I do a little bit of the usual risk disclaimer. Please take a moment to read this and understand it. Trading is risky. Make sure you know what you're doing before you start. Those of you who haven't been on these regular webinars, just a quick overview of myself. Trading a long time, 20 plus years, traded virtually everything: futures, bonds, commodities, forex, options. So I know how the markets move. I do both discretionary and algo trading, but the purpose of these webinars is really just to show you my process in how I look for trading opportunities for my discretionary style, basically. And I'm also here to help you to see if you need any help understanding, basic concepts and that kind of stuff. So please feel free to ask me any questions. Today, we're going to have a look at some trades in the past. We're going to do some market analysis, look at what's coming up on the news. We've got a couple of news items today, which we need to keep an eye out. And then I'm going to show you our ZenFinex Plus tools and how we use them and how you can get free access to them. And let's just get started straight into charts. I don't want to spend too much time on this. Let's get charts up. Bear with me 1 second. Hopefully you can see these charts, which I think you can. So what I'm going to do, as I do every single session, is do a top-down analysis of what is happening in the marketplace. I'm going to only sort of focus on gold, the FTSE 100. Actually, I may include the NASDAQ, because the NASDAQ's been doing some interesting things in the last period. And it's worth keeping an eye on NASDAQ, because there may be some trading opportunities there. So let's just pull up the NASDAQ chart as well. And we can see it's been on a nice trend. Is this signaling, the topping out? We'll use technical analysis and a systematic approach to kind of see, what we can do with the NASDAQ here. So those of you who regularly come to these webinars, I'm just going to do my usual top-down approach. Start drawing in my support and resistance lines from a longer-term perspective, just to gauge and to frame the market. So we want to just try to understand, what is the range that we're looking at? Are there any important levels coming up, which we might need to take into consideration? So let's just now drill down to the daily. You can see our weekly lines are still there. So I'll squeeze it up a little bit. And this whole process, once you get used to doing it, only takes a very short period of time. It's not a lengthy process, but in my opinion, a crucial process. So we can see here, from a daily perspective, we've got some levels which we need to include, because when we look for trade setups, we want to make sure that we don't run into these without some sort of consideration. So these are the daily lines. Now I'm going to go to the 4-hourly, and we can see that we've got some levels here. So you can see it's a very quick, systematic approach, just looking for key levels on different time frames, and then we start narrowing in on what is happening today and part of what's happened yesterday, and we can then start saying, okay, what is our trade setup? So let me do this for these 4 instruments, and then we'll go back to the 4 instruments and start looking at ways of finding trades. Just seeing some people joining us. I just want to welcome you. Welcome, guys. Please do feel free to ask me any questions. I'm here to help you and just to sort of help you on your journey of trading, because that's probably why you're here. You're interested in trading. So this is the NASDAQ. Let's have a quick look at, from a weekly perspective, the euro dollar. And, while I'm drawing these lines up, the other things that we need to consider is the news that's coming up today. We've got some unemployment news and some other bits and pieces. We need to keep an eye on those. And that's important because when we are looking for trade setups, we want to make sure that the news doesn't blindside us and get us on the wrong side. So today's really going to be about levels. Where are levels that we need to be looking at? Let's go to the daily. And we can see here from the daily perspective. And all I'm doing really is at the moment just marking up areas where I think where the market had previously done something of interest that might happen again. So if I just spot a level here, the 4 hourly probably will pick that up a bit better. So I'll adjust that once we get to the 4 hourly. Let's go to the 4 hourly and have a look. And you can see this level is important. This level is important. And I'll come back to what this orange area is in a minute. I did some sort of pre-webinar analysis, and I'll show you how I look for areas where I really want to start looking at, placing trades. Remember, this isn't investment advice. It's purely for educational purposes. This is just the approach I take, and you need to learn how to do it properly. I'll do my best to teach you, but ultimately it's going to be down to you. So we can see from a weekly perspective, we've got a range. Let's go down to the daily. We can see that it peaked here, and you can see how quickly we can do this. This is part of the process because one of the things I've learned in my many years of trading, if you stare at charts too much, you start seeing things. So in many ways, I like to just zoom through it, look for areas where markets turned and where they may turn again in the future. So this is let's go down to the 4 hourly. We can see here, we're pretty okay with the levels we've drawn. And I'll come back to this area here on the JPY. JPY has been also interesting. I took a trade last week and it hit its target. I only put a small lot size on there, but it gave me a bit of profit. I think it was Friday that I took it. So that's the 4 hourly. We'll come back to that. I like some of this area here because remember, those of you who regularly come to my webinars, I always try to understand why prices moved and why they turned from those spots. And that will help me in not only looking for entry points, but also targets and stops. So all these levels that I'm drawing are important. So let's now do the FTSE 100. I think everything's going to be a bit subdued this morning because of US news later on. We're going to cover that in a very short period of time. I'm going to try to keep this webinar to sort of 35, 40 minutes because everybody's busy, everybody's got things to do. And, we can get through this quite quickly. So let's go back to the weekly on the FTSE. And we can see immediately areas where we need to keep an eye on. Why have I drawn it there? Well, look, it turned here. It didn't close below here. So when this rapidly approaches this level, obviously we're going to be interested. We're going to be interested in what may happen around that level. So now let's go to the daily. If you want me to do this more slowly, I can do that, but just pop your question in the chat box and I'll try to see if you're getting it. So we're on the daily. We looked at yesterday's close. It came, so we can see, right? Market came down, immediately jumped off it. And in fact, let me draw a line so we can actually see it. So we can see here, prices came down, consolidated for a short period of time, moved away, came back into the zone, and then shot off. It's now back actually into the zone here from a daily perspective, and we need to keep an eye on that. We go to the 4 hourly, we can see here. This level here is going to be interesting to us from a 4 hourly perspective. Why? Because look, resistance, and if I go back a bit further, resistance, support, hit the top, bounced around this line here, formed resistance, fell through, support, and now we're back into this area here. So hopefully it makes sense and is logical to you. If you do this over and over again, it will just become second nature to you. So I'm on the 4-hourly. Now let's go and have a quick look at gold. Again, start from a weekly perspective. Let me get rid of these lines first, because I like to draw fresh lines every single day, or most days, just so I can make sure I don't miss any important levels coming up. We've seen the triple top on gold. Just tried to break through it, came back down. Break through it, come back down. Break through it, come back down. You may ask, why have I not put this up here? Well, I can, but when we get closer to it, the daily support and resistance lines will override the weekly ones. So we can see here, this level here, prices came down, went back to this triple top, came off. We've had this sharp move from, let's see, from this level here, hit its head on the top of the weekly, and now it's looking to fill some of this area here. So there could be some trading opportunities here. We're still on the weekly. Let's see if we can get to the daily and see anything different, anything more interesting. You can see here, this level is interesting because prices shot up, couldn't get much past it for a period of 3 days or so, bounced off this and began its journey to the top. And now we're interestingly breaking below this level here. Maybe we haven't broke this level, actually. Let me draw that in. We can see here, resistance. Broke through resistance, came back. Yeah, it's a little bit messy there. Bounced off it, hit the triple top, came back down. And again, it doesn't like going too much underneath this 1955 level from a daily perspective. Let's go to the 4-hourly. From the 4-hourly perspective, you can see here that, and I'm going to start drawing my channels in. Again, those of you who know and watched these previously, I focus on support, resistance, trend lines, channels, and fibs. They're my main tools. I don't use moving averages or oscillators. I have nothing against them. They just don't seem to work consistently enough for me. This is what works for me. Other things may work for other people. So from a 4-hourly perspective, we can see here that this level is important. Why is it important? Because prices move sharply up from the support, resistance, bit of messy resistance there. So I like this level here. When I say I like it, I mean I'm going to pay attention to it from a 4-hourly perspective. So what we've done now, we've put our levels, weekly, daily, and 4-hourly levels. Now what we start looking to do is trying to get some idea of direction. And the way that we do that, the first best indicator that you'll ever find in your life, the most expensive indicator, the irreplaceable indicator that you all have, and that's your eyes. Don't let your eyes deceive you. If you see a downtrend, don't think to yourself, well, it must be in an uptrend, or I want to buy. This is where I think a lot of people come unstuck. They let their eyes deceive them, and that's not a good thing. So we can see here, we've been in a downward channel from a 4-hourly perspective for quite some time. It's hit this important level here, bounced off it, and we're back. And now you can start seeing why I've got this potential sell opportunity here. Now, if I magnify this a little bit, we can see that we are coming up to this top of the trend line, channel line, I should say, and it's finding some resistance to it. It doesn't really want to get past it. So I'm going to be looking at this area here, watching price action to see if I can take a possible sell based upon the channel. The only thing I've got to be really careful of or wary of is that there is support here. So if I do take a short, I've got to manage my risk and make sure I watch what happens around this important line here. You can see we get more and more people in, which is great. Again, don't be shy to ask me questions. You know, that's what I'm here for. No question is a silly question, because a question usually is something that another person may be thinking about asking, but are a bit fearful. And the other reason why people don't ask questions is because they think they're silly questions. You'll be surprised, the most silliest questions pull out, you know, deep knowledge and deep understanding, and that can help you as well. So don't be shy. Right, so we're on the euro dollar. Okay, so let's just put the channel here. So what I'm going to do now, once I've drawn my levels in, once I've drawn my channels in, once I've drawn areas where I'm going to be looking, you know, for trade opportunities, I'm going to check the news, and we're going to utilize some of the Zenfinex Plus tools, and I'll show you how I use them to help me with the trading side of it. So this is euro dollar. Let's go back to gold. What do our eyes tell us? Well, from this high peak here, it's been in a downward channel, very similar actually in appearance to the euro dollar. So let's just put the channel in. And with channels, right, people sometimes say, well, they're a little bit subjective. I guess they are to an extent. And I'm not using the channels necessarily. I look for other things other than just an individual support or resistance line. I look for other things other than a channel, the top of the channel, the bottom of the channel. I look for other things which might give me clues on where really I should be looking for trading opportunities. Let me just go back to this. Yeah, so on a 4-hourly perspective, we're very similar to the euro. It's hit the top of the channel, and it's starting to, you know, come down in the last 4 hours. So if I go down to an hourly, we'll be able to see how we can utilize this consolidation area. And I'm going to do the consolidation areas in a second, but I can already start seeing where I'm going to be looking for trading opportunities purely by doing this from a naked chart all the way down, weekly, daily, 4-hourly, and then I start drilling down to hourly. I don't necessarily go below hourly timeframes because I find them a bit too noisy and a bit confusing in terms of precise entry points where I can reduce and minimize my risk. With this gold trade, look, as I said, news is going to be a factor. I'm also can see a nice fib level here, which I'm going to come back to in a second. I want to try and do this in a systematic way where you guys can start maybe adopting some of the systematic approaches that I do, in hope that it might help you. It might not, and it might be contrary to your own style of trading, but all I can do really is tell you what I do on a daily basis. So again, with the FTSE, had a big drop down, retested this level of support, which was probably previous, let's not use the word probably, let's see where it was. So here was this level here. So resistance, resistance, broke away from resistance, just smashed through it, came back and retested it, messed around there, broke through it, retested it. So it's obvious to anybody that around the 76.36 level, we've got some support resistance areas here. Why is that important? It's important because when I look for trades, I don't want to be the one to try to break through that. And on the other hand, if I have a stop around this area here, depending on my direction, you know, I can utilize the fact that it is a support and resistance lines to help me in determining whether this is a good spot to put, you know, my stop or my target, depending on the side of the trade. Again, we're running into this level of support here from a, I think it's on a 4-hourly basis. So we need to just be a bit careful. You can see for the last 4, 8, 12, for the last sort of 8, 16 hours, you know, it's been consolidating a little bit, and that has to be due to the news that's coming out. which is going to affect all markets, I believe. So we've done the top down. Let me just make sure we've got the dailies. Yeah, we've got the dailies. So again, utilizing our eyes. It's been an uptrend, consolidated around the 137, hit its head, double top, triple top, depending on what you want to call it. It's now taken a bit of a breather, and the question really is the JPY now going to break through that to create new highs? Now, I'll have a bit more sort of information next Tuesday about some research that I'm doing on the yen, which will help from a fundamental perspective. But it's been on a bit of a tear from a daily perspective back from March, found support, and really, even though it hit some resistance here, it came down and then just re-energized to create the top. Now, from a longer term perspective, I still think there could be some way to go because it has to fill this long bar. So I'm looking for ways to see if I can take this continuation upwards, but I'm going to base that also on the basis of some fundamental aspects of it as well, because this would be a nice trade. If we can get a nice, decent trade size, lot sizes, and we can take it all the way up there, because I think it's probably going to test it. Those of you who have watched this previously have probably shown this this fib level. I'm going to curve fit it a little bit. It's probably around there. We can see here the body, nothing closed above this level here. There's a level of resistance that I put, and we're right at the 618 level. So this is actually a very, very key level. So when I do drill down to the 1 hourly time frame, I've got my 618 acting as resistance. I've got my resistance line from the weekly perspective and daily perspective. So I'm going to be looking at this. This candle here is extremely interesting because it's a complete rejection. Prices shot up, knocked out a lot of liquidity, and probably picked up some sell side orders as well. So this whole area is something I'm looking at. The 618, once we know what we're going to be doing, probably it'll be sort of next Tuesday, where I'll be looking a bit more closely to where I want to put my trade entries in. Let's see which other one we're looking at. On the euro dollar. Let's do the FTSE. Sorry, the NASDAQ. Just going back, we've looked at where the weeklies are. We've seen some important levels of resistance here. It's been on a real charge for quite some time, and we all know what it's been driven by. It's been driven by NVIDIA with AI and technology companies gearing up hardware, software, resources to take advantage of the next big thing, which is obviously AI. Will it pull back some of this area here? I'm not so sure. I think it will definitely find some difficulties around this area here. I do apologize if there's lots of lines here, but lots of lines doesn't necessarily mean it's a mess. For me, I'm looking at these levels because they are important. They're important that when I take a trade, that I take note and take some action or consideration when we start approaching these levels here. So this on the NASDAQ, the gap up is also very interesting because, again, it's NVIDIA's sort of influence at the moment. This pullback, for the last sort of a day or so, it's just filling that gap. It may come down to this level here, draw a level here. Because of this consolidation and bouncing off this level of support, could be a good area if we are still mindful of the upside. So let's just have a look and put a channel there as well. So hopefully you can see I'm just drawing the same things, different instruments, and trying to gauge what impact the channel might be having on this particular instrument. And look, so this for me is a good area for potentially, based upon support, based upon the bottom of the channel. We've got 2 or 3 things here: the consolidation here, the rapid movement away from from this support level, hitting its head on some resistance. Not much buying at the moment, so there'll probably be professional buyers looking to buy around at cheaper prices. I think that's what's going on here. I mean, I could probably narrow this down and try to ignore this drop down, but I think the fact that it's done that, I'm going to keep it in there. Right, so I think we've gone through all these with channels. Right, so now what I'm now looking for is, can I find anything to support the sell here? So let's look at fibs as being, because what I'm trying to do is I'm trying to have a number of tick boxes ticked. Are we going with the direction of the trend, the overall trend, the slightly longer term trend? Are we hitting any support resistance levels which may interfere with us? Those same support and resistance levels could be beneficial in terms of stops and targets, and that's what I'm going to look at as well. And then I start looking at consolidation, the breakout of the consolidation, and then the retest of the consolidation. So if I move this across a little bit, we can see here that prices, after coming down, going back to 25th of May, and I'm on the 4-hourly, bouncing up and down, and I could probably increase that, but I like what I've drawn here because it gives me a nice risk to reward. For example, I mean, it's probably just kissed it and coming down, so I wonder if it's already done what it needs to do. But the news is going to prevent me from taking too many riskies. Once the news has been announced, I'll then redo my charts, redo my support and resistance, and then go at it again. That's what I do when after news has happened. So talking about news, so hopefully there's any questions before I go on to some of the Plus Zenfonex tools. What I'm doing here, I do every day. I do this for years and years and years, and it just works. And people sometimes, I think I got a question yesterday on a webinar, do I use RSI, or do I use this, or do I use that? Unfortunately, all I had to say was, look, this is all I use. I've tried numerous moving averages. I've tried numerous oscillators on oscillators, and moving averages on oscillators. I've tried everything. As an algo programmer and trader, I look at what is happening now, what is price behaving like. And if I introduce, and when I have introduced things like moving averages, it completely, well, let's talk from a technical point of view. It introduces lag. And when you introduce lag, you're always going to be late to the game. You're always going to be too late, and your risk profile is going to massively increase because you are late. It's better to try to project forward and look at where markets may turn because they have done something in the past. That increases your probability of getting it right from a forward perspective. So I consider things like channels, things like support resistance as forward looking. I'm looking to see what price is going to do when it reaches these certain levels. So if anybody has any questions about moving averages and oscillators, I'm not the best person to ask. I don't knock people who use them. I don't knock the use of them. I just don't know how to make money out of them. That's my problem. Right, so let's now go to, just bear with me for a second. Let's get another screen up. And I try to promise myself that I will keep these under sort of 40 minutes, and I always seem to fail because I do go on a bit. I could probably go on for another hour on the charts, but I think that wouldn't be a good thing. So look, as I mentioned, some of the tools that I use are from the Zenfinex Plus portal. It's absolutely free. Just check it out, log on, get a free membership, and we'll look at some of the tools in 1 second. I just thought I'd cover it quickly first. And this is the website. It's free. There's no charges. Log on to it, and I'll show you some of the tools that I use here. Let's go to the tools. Where are they? Bear me for 1 second. So the one that I use probably the most is this news. Let's go back and show you where you can get it. Sure, I'm signed in. So the main tools that I use are the economic insights. And what that does, it gives me a plan for today. It gives me an idea of what things may move markets. And one of the things that obviously is going to move markets is important news items. And today at 1:15 London time, we've got the employment change in May. And I'll tell you how I use them in a minute. Those of you who've been here before know how to use them, but they can be quite cool in terms of seeing how previous news announcements, whether they were above or below expectations, how it moved the market. So the things that we've really got to be careful of today is going to be, because look, the dollar is going to move gold, it's going to move the euro, it's going to move the pound, it's going to move to an extent the indices, right? So we need to keep an eye on that. One bit of good news, I suppose, if it's good news, is that the debt ceiling seems to have been resolved in Congress yesterday, and I think it's now just awaiting one signature. So once that's out the way, we can start looking at different things to be relevant to our trading. Sometimes people ask me, we're waiting for this, or we're waiting for this to happen. In all the 20 years plus that I've been trading, there's always something on the horizon that you have to be keeping an eye on. All the way back, I mean, I could give you 100 stories of all the things that we've had to be careful of. And then it just becomes part of your trading. You just have to factor in that after the debt ceiling crisis, there's going to be something else, and there's going to be something else, and there's going to be something else. Just factor that into your equation. And sometimes people get paralyzed by, well, I'm not going to take a trade until this happens or that happens. It basically means you'll never take a trade. So take it into account, but don't let it sort of prevent you from utilizing your analysis to take trading opportunities. So I digress, I apologize. So ADP news, initial jobs claims, which is going to be a big market mover, I believe. How do I know that? Well, if I look at this impact tool, we can see what impact it had on the euro, on the US dollar. So this is basically last news announcement, which was on May 25th. What did it do in terms of the market? It moved it by dropping down with a range for 15 minutes, about 18 pips. So it tells you how much the market moved on last news events, whether it was better than forecast, was the actual better than forecast and better than previous. So, it gives you a nice little summary here. And I always try to look a little bit further than these sort of 15 minutes. I try to look at what happened 4 hours afterwards. And the news announcement was here, and prices generally came down. And not only did they come down, but they continued to go down, because if we look at our euro-dollar chart, we notice that we were in a downward channel. So everything makes sense. Now we have to do is see what is the forecast for initial claims. So the actual was 229. They're expecting to be a slight increase, but of course we won't know until 1:30 London time what the impact it was. So they're saying last time round, or they're projecting it to be higher. So let's see what the 25th of May news said. So their forecast was higher than previous, but the actual was less than forecast, but more than previous. So these are the things you need to start, for the news traders anyway, they would be looking at this stuff and saying, okay, I'm not going to just watch what happens in the 15 seconds after the news has been announced, because usually you get a lot of volatility, very difficult to get in unless you have preset orders already built in. It's about understanding what the news is, how did actual forecast and previous behave on previous ones, because what you can do, you can go back further, you can just keep going back and looking at, for example, May. Previous was 242, projected or forecasted was 248. So it was higher, and this is the impact that it had. It shot up, gapped up, rapidly came off, and then really found its way right back where it started, because that's what markets do. They build this news into their pricing and make a decision. And what we want to do as traders is understand how the larger market is moving prices. And if we can start understanding that, we can start preparing, because a lot of news traders, that I've come across, they will literally have their finger on the button and they will press the button as soon as the news is announced, up, buy or sell, or buy and sell, or a variation of all sorts of different techniques. And I think it's more of a luck game then. I would rather look at what actually happened in previous events and see how I can build them into my trade idea, into my analysis when I decide to take it. Whether I take it, take this impact from a very, very short-term perspective, right? Look, as soon as it news, it gapped up. And those of you who have traded news, you'll know it's a whirlwind. So, always make sure you know what you're doing before you trade news. It's particularly risky. I like to look at what the impact was, and what that impact might be going on for the next 1, 2, 3, 5 days. And this is quite a good tool here. I'm just going to spend another 2 minutes. By the way, please feel free to ask any questions. I'm here for another couple of minutes. So do ask. There's a chat box in there. All you've got to do is type into it, and I'll try to answer it for you. But we are running short of time. So I'm going to just show you quickly technical views. Once it loads up. So here it gives you a number of potential trading opportunities utilizing this particular analyst's ideas. Thing with the market, everybody's got an opinion on if it's going up or down. What you have to do is try to figure out who's more likely to be right. This one is basically saying, strength in the USD JPY. We kind of talked about that, but it's been coming down. This, remember, on a 30-minute time frame. It's showing its moving averages and oscillators and moving averages, and you can get a bit of an understanding of what they're trying to say to you. And really, I've hit my target of 40 minutes. I'm just going to open it up for questions quickly. If there are no questions, I'll wrap it up, and we'll look forward to seeing you on Tuesday, where I'll probably discuss what is happening as a result of these news items, any trades that I may have taken today, tomorrow, Monday, and we can analyze them and see what we did on those. So on that basis, I'm going to say thank you, and look forward to seeing you next time. Thank you very much.